Good morning, freaky people. We are joined today by the incomparable Jeff Macke. We're going to talk about a bunch of things. Jeff, how the hell are you, pal?
I'm good, Philly. I'm good. My nostrils are all flared up. I got the animal spirits in the air. Even my kids are like, "You seem like you're in such a good mood, Dad." And I'm kind of good mood adjacent. I'm just revved up. I like the animal spirit, so I'm hanging in there.
Love it. Crazy market we got here.
It's a little bit bonkers. It's a little bit crazy. This is what happens when you have a void of information. It's the easiest way to explain it to lay people. They're even when it's wrong, Wall Street loves to cling to some sort of out quarter math. Earnings will be this after this terrible event. And this one, as long as we're still canceling stuff, you can't do that. There's no way to project what these companies are going to be earning 6 months from now, a year from now, as long as we don't have our arms around it. And so, does down 2,000 in a day make sense? I don't know, because I'm not sure. I'm dying to buy Nike. I have no idea what it's worth until they cancel the Summer Olympics and put football in the fall on the table.
There's a predictability. There's usually predictability to markets. There's a rhythm. There's 4 quarters. There's, sell in May and go away. There's, as a matter of fact, I just had lunch with Trader's Almanac the other day, and we were talking about that. But this completely throws that off.
Right. And I treat it, since I've been focusing really on retail and consumer, taking advantage of this transition into omni-channel, I'm pretty much in my lane, because that's the only advantage I have in equities. I can't compete with the whole market, just my space. And so when you see something like this come down the pike, all your normal workload is ruined. Retail earnings season, to me, is one of the 4 majors of the year. If I played golf, it would be retail earnings season. Every single quarter is basically, I build my quarters around that. Hasn't mattered at all this year, because it doesn't matter what a company says in this market. You just look at the calendar and you hope the Dow's not down 1,500 when something you're long reports. Because Gap reported last night, where we're talking on Friday. It didn't matter what Gap was going to say. It didn't matter even a little bit. It's the stock will be flattish today. They had nothing but garbage coming out of their mouths, and no one was listening. Costco had a tremendous quarter, and the stock went down 10 straight percent. So your work patterns, the things that have made me money for the last 3 years, are useless. Absolutely useless. Psychology dominates in a tape like this.
Quick store check for you. I was in Costco yesterday, middle of the day, Thursday afternoon. Packed, and Costco was handling it unbelievably well. Just for your FYI.
Yeah, and I think people are missing that about these general merchants. They're handling it as well as they can. It's general merchandising is all about inventory flow. And so they're not set up for the Perel demand to go up 900% over the course of a week. It's going to take a little while for that supply chain to adjust. And particularly a store like Target, just because it was built on the very idea of getting people in the door for basics and then selling them a $12 t-shirt with a 50% margin. What people are missing is that even when folks come into the store for the bottled water, for the toilet paper, for all the weird stuff that we're hamster coughing, we're hoarding like a bunch of crazy people, they're going to buy other things. And so it's up to the stores. If you're a retailer and you have people coming into the store for Perel and you can't think of a single other thing to sell someone that's about to lock themselves in their house for the next 3 weeks, you're not a very good retailer. So the numbers that we're going to see out of my space in March, we're going to see incredible same-store sales, just crazy, crazy good same-store sales, which will probably be discounted until they refill the shelves. I've been going to stores all day. The best time to do it, by the way, is like right around now in the morning, right when the store opens up, because that's when you can talk to the stock people who are still replenishing the shelves. And they're the ones who haven't been schooled by the manager not to talk to guys like me early in the morning, but they're the ones who will tell you what's what. And the truth is, the supply chain right now, they're not getting the hand sanitizer that they were promised. I have no idea if stuff's falling off the truck. I have no idea what's going on. But eventually those things will get back into stores, because it doesn't make sense. I've hoarded water. I was actually reviewing it with my assistant. I think maybe 4 or 5 times over the course of my trading life. We have the 9/11 water, we have the Y2K water, we have the financial crisis water. I got a few gold bricks from that. I've hoarded a lot of stuff in the past. I've never really needed it. Doesn't mean you shouldn't hoard now. Knock yourselves out, shop in good peace, but just realize that you're probably going to be going through that toilet paper for a few years.
There was no toilet paper at Costco, by the way.
Absolutely none.
They were out of. They were completely out. It was unbelievable.
People are going to be doing Canadian bidets. Just go in the shower, rinse it down.
Canadian bidet, nice. So, okay, so the rhythm. Okay, so let's talk about retail a little bit more. Let's talk about the next potentially. And I know we're talking about the future. We have no idea really what's going to happen, and we can only take our best guess. But right now we are ending Q1. We're heading into Q2. What do you see in terms of that rhythm? And retailers really have a rhythm. So you get into that. They got the same store sales that they report regular basis. Then they have the earnings. Then they have the different seasons that they specialize in, whether it's Christmas or Halloween or whatever. Mm-hmm. So what are you thinking about? Like what's your theses going into Q2?
My thesis is really this is tantamount, this being the global pandemic. Sweep it aside with this, meaning the deaths surrounding us. But it's the equivalent for the retailers of just a massive recession. And so what should be happening in Q1 and Q2 in the retail universe is really kind of a reinvestment in the stores. This is when the traffic is down. It's post-Christmas. You've got Easter and then back to school, but really retail is all about kind of replenishing the batteries this time of year. And so what this crisis has done, and why you're seeing the mall stores get so murdered, is you have chains that just haven't invested in their supply chain. And so the Gap last night, I mentioned it before, so I'll pick on them again. They have hundreds too many stores, literally hundreds. But their entire Gap.com business is based on people in empty stores folding up clothes and sticking them in a box. They're not a company that can withstand this kind of recession. This drop off in traffic will kill their cash flows, and that means they have no chance to reinvest. And so what you're going to see is a bifurcation. The chains that are set up to deliver to customers no matter how they want it, buy online and pick up in store, come in and get all your discount stuff in one place, or have it delivered, that real omni-channel experience. Those people have a huge advantage in this type of tape. When people are getting afraid, they're going to want limited transactions from the best general merchants. That plays to Target, it plays to Costco, it plays to Walmart, but it doesn't play to any of them just yet. It's going to take a couple quarters on this. So I'm kind of picking away at the long side, and on the short side, just trying to take advantage of some of that volatility, because I'll be honest, not to talk my book, but whose book am I going to talk? But a company like Foot Locker, when they cancel spring sports for everybody, which is what they're going to do, that's a real problem for Foot Locker. That it's a genuine problem, not because they sell a lot of shoes to LeBron James, but they sell a ton of shoes to kids who play soccer. And if that's canceled, that's going to hit them right where they can't handle it right now, which is, they've done all the buybacks. They've done all the rejiggering they can from financial engineering, and retail. A lot of these companies don't have the slack to withstand any type of recession that goes on for more than a quarter.
So I see this as really an extension of a theme. So there's a huge theme that's been playing out, and it's been a little bit underground. And that is, there are companies that facilitate working remotely, and really more than just working remotely, living remotely and operating remotely, that and you see them holding up better and rallying and they become like the noise candy stocks. Zoom is one of them. And really, there's a similar potential trend that this is not creating, but it's unearthing, occurring in retail. So a company like Amazon that has this all set up. As a matter of fact, I ordered from Amazon yesterday. A company like Amazon is like all set up for this, so that if we are all of a sudden not going anywhere and I still need to buy whatever I need to buy, boom, there you go.
they're sort of stepped up for it. There's no one who's perfect right now, which is interesting in retail because and I've bet kind of everything I have on this over the last 5 years, just in terms of the retail trend, which is that the incumbent players, the Walmart, Target, Costco is kind of the triple header of them. Home Depot, if you want to throw in a little bit more specialty, they're catching up online. It's easier for them to develop robust online channels than it is for Amazon to build stores. Amazon's about 1,000 stores short of what they need for distribution. So you're going to have this combination. I really think the omni-channel players have a chance to take a lot of share from this type of experience, this type of meltdown. And you know as well as I, consumers are creatures of habits. The hardest thing to do in retail is to get someone to change stores. Whatever your local grocer is, you probably don't love it, but to get you to go to a different grocer would be really hard because whatever it is, the guy to the one will keep you there again. It's most convenient. It has the decent prices, whatever. Getting people to change is hard. It takes a catalyst, and boy, do we have a catalyst right now. So, Target has been doing buy and pickup. It's tremendously popular, but the idea of loading up all your products, buying everything you need, and having a person that you never have to really talk to that much scurry out of the store, put it into the trunk of your car, and you drive off, that's going to be an appealing interaction for a pretty large, a reasonable percentage of the population because of this experience. And once they try it, I don't think they're going to go back. And that represents market share for Target, and retail's all about that market share. My favorite fact in this, Sears is going to do $15 billion in revenue this year. I have no idea how. I think 90% of them are closed. I think old people come and just leave like their penny purse at the door of Sears. It's impossible. Once people get into habits, they will shop at a store until years after that store is dead. And normally the only way to win customers is competing on price. Now you can compete on ease of delivery, and that's a huge shift.
All I want is somebody who will deliver a really good tomato.
Right? Yeah, completely. Every time.
Every time. I want a good tomato. I don't want one of those tomatoes that obviously has been refrigerated even before it was ripe, and you get it and it's cold. Every time I've ever gotten, and we used to use Fresh Direct when we lived in Brooklyn. Like that was like an early one that had some success. I don't even know if they're still around.
But they got swallowed by the Germans and just went out of business. Yeah, anyway.
Oh, really? Oh my God. Do you know anything going on with Fairway right now?
They're gone, aren't they? Or they're getting their private equity. They never should have gone public.
It breaks my heart. Yeah, it breaks my heart. But they did it to themselves. They did it themselves like 8-10 years ago, right? They took on all this debt. They did a deal. They took on all this debt. They way over leveraged themselves and expanded too fast. And they're still. I've watched them go downhill with broken heart. I mean, we used to go to the one in Red Hook in Brooklyn back in the day, but we move out to the suburbs. Then we go to the one in Paramus is still there, but we would go to the one in Nanuet. They closed that down.
I mean, this as nice as possible, but Fairway is kind of a shithole, Phil. To be honest, people on the East Coast don't know better. There's all kinds of good grocery stores that you guys will be able to go to once Fairway is gone. But
no, it was a great store. But I know, I mean, we go to Wegmans now. We go to Whole Foods is fantastic. Wegmans is really fantastic. I mean, they did it right.
But to your point, it is a huge thing, and it's why the $800 billion a year grocery industry in the U.S. really hasn't taken off online. It's that damn tomato, and you got to get it right 100% of the time, because one bad tomato, and as far as you're concerned, that company is dead to you. We are wired on a limbic level to avoid food that is contaminated on some level to us, and people just can't get over the hump. So while you have no emotional attachment to loading 12 packs of club soda in the trunk of your car because it's a pain in the butt, man, that tomato, if it's not ripe and fresh and doesn't seem like someone who gives a crap picked it for you, you're not going back. And it's a hard nut to crack. And that's why all these companies are still circling around grocery. But in terms of e-commerce, you have maybe 2% penetration in grocery versus probably 20% for the rest of everything that's sold. So, that's the nut that everyone's trying to crack. I don't think they have it yet. And so Amazon, in theory, should be able to really capture share with the delivery model when people are going to be quarantined. But I tell you what, folks are going to adjust and they're going to go out and they're going to buy their own produce because they can't stand having it delivered by someone else.
I agree with that. We go to a farm right up the road, and we get great tomatoes, and it's like.
And there's just something about it, right? You hold in your hand, you sniff, and it's nice. It's limbic, but that's neither here nor there. The big habits, though, that you want to pick up on from an investing side, omnichannel is a real thing. And it was such a buzz phrase for so long that it almost lost all meaning. But, in the words of Lyle Landley, omni means all and channel means channel, omni-channel. Retailers that are delivering everywhere, any way you could conceivably want a product, you should be able to order it. And Target is the only one that actually has that kind of in their mission statement, which is creating the easiest place to shop. But that's really what they're all trying to do is in this day and age, whether it's in your, an app online at your desktop, or you're just driving down the street and you want to know where the nearest store is, retailers got to be good at all that. They have to be good at all of that, however the customer wants it.
Let me tell you, I just love talking to you. Let's shift gears, though. Let's just talk about the lunacy that is occurring right now. I mean, occasionally, periodically, over the course of history, we are going to have, we have these extended periods of relative calm, where there's the rhythm that we were talking about in the beginning of this conversation where, okay, same store sales, okay, it's Christmas, okay, they're reporting earnings. We get into this rhythm of the market, the quarterly thing, seasonality, and then every once in a while, boom, we have
none of it matters.
Lunacy, and it's, the tulips blossom or the great crash of 29 or whatever happens, volatility breaks out, madness of crowds. I know you've been there. Why don't you tell us about a little bit about your take of what's going on right now?
People don't know. And it's another cliche that's been beaten to the point of irrelevance that the market hates uncertainty. But what that actually means is people who trade for a living, who do finance, need to be able to build a spreadsheet. And to do that, you need to have at least some sort of educated guess about what revenues are going to look like, about what earnings are going to look like, about how your store traffic is going to work. And right now, we don't have that. As long as we have this level of uncertainty, and by this level of uncertainty, I mean they just canceled March Madness. That's about as uncertain as things get in America in terms of institutions we rely on. And the next one they're going to do is the Olympics. But the trickle down on that for the retail side things is that they're also canceling school sports because they're unjustifiable. And in this environment, one kid gets sick and it sure seems silly to be having that travel soccer tournament where everybody's infesting each other. So we got to get through that level of this crisis before you're going to see stability in the stock market right now. And that's going to hit these companies in ways people don't think about. So when you cancel NCAAs, I'm not worried about how many shoes these kids from Duke are going to sell. What I'm worried about is the fact that spring sports are track and field, are soccer, you got lax, you got all kinds of different things. Men's tennis, it's all going to be gone. And that's a huge hit for companies that can't necessarily afford it. That's why you see Dick's Sporting Goods reported this week. They opened at nearly 40 and they closed at about 30, and they're probably in the 20s now. Because whatever they reported over Christmas, they are not set up for the cancellation of all the spring and summer sporting events for kids.
And what are you doing now? So what are you, I mean, you've been through this before, and what are you doing now? And you're actively investing. What are you doing now? I mean, you're in a great place. We know each other well, and I know that you're in a good place, but what are you doing now to sort of even, keep yourself balanced, keep yourself balanced during this period of that periodic instability?
I think it's about goal adjusting to an extent, and by that I mean, listen, this is not my first bear market rodeo, and I love the stories of the guys who win the bear market lotto tickets. Who doesn't, right? The Big Short, the iconoclast who sticks it to the man. It's the part I was born to play. The problem is that's not a real person. I know 6 guys who went bankrupt on basically the same trade as the guys in The Big Short. Your job here is to just keep your money. And so what I'm doing with my book is deciding things like, I have core long-term holdings in a lot of different consumer brands, among which going into this were Nike, Target, Walmart, Lululemon. I trimmed Lululemon and Nike, not because I think there's anything wrong with these companies, but because when you cancel all the sporting events in the spring, it's going to be a headwind. It's going to be a problem. I pair that off against some shorts, not going crazy, not trying to reinvent the wheel, but just buying some protection. And that means that a week like this, I escape maybe flat. I think I'll be down 1 or 2% this week, which is just fine, because this is clearly an any landing you can walk away from market. And when we're going back-to-back days up 1,000, down 1,000, you're not going to make a ton of money. Just grind it out, take your profits where you can. And I think step one of that is deciding whether or not, just go through your book. Is this a company I would stay long through 20%? If it went down, would I buy it or would I sell it and rue the day? And if the answer is the latter, you would live in regret for owning this dumbass company that is in your portfolio and you're trying to cling to. Sell it in advance. Sell it when we're up 1,000 and just have it out of your mind. Try not to have those lingering things that wake you up at inappropriately early hours, sometime around midnight, and you wake up and suddenly realize that you're long a bunch of garbage retail. Don't let that happen. Take proactive advantage of your book and just try to kind of settle things down for yourself.
There's no replacement for experience. I mean, you said that was the first thing you said when I turned the car, when I segued. You mentioned the word experience. You've been there. You used the word rodeo. You've been there before.
97, the very first circuit breakers that ever took place, it was like 3-4 months after I opened my hedge fund. I'm getting annihilated by the Thai freaking bot, which to this day, I just want to shiver and cry a little when I hear Thai bot. And I've never used a Thai bot, and I don't anticipate using a Thai bot for currency anytime going forward. But 97, they melted down the market. And that was the first time we had the circuit breakers that we've seen triggered over and over this week. They didn't really work then. They don't work now, but I've seen them before. And so I'm not afraid of them. And you're right. There is no substitute for just kind of that sense that it's not Pollyanna that things are all going to work out just fine, because they'll work out some kind of variant of that. But the truth is, the future belongs to the optimists, because if the pessimists are right, well, there's not much of a future anyway. So you're always better off betting on the world existing in some form resembling what it is now 10 years from now than you are shorting the entire planet to zero.
Hey, Jeff, we're gonna cut it off here, but I would love to do this again, because the conversation, the time went by in about 2 minutes. 20 minutes went by in 2 minutes.
It's nice to have someone to talk to at this hour of the morning for me out here.
Dude, listen, we're going to do this again. We'll do it even earlier. And I know you're an early guy. And I just, it's just so great having you here. We could have just shot the shit the whole time and not even talked about markets.
Anytime, Philly.
Anytime. That's all I got to say. Okay. Adios. Adios.